When Gallup asked 100,000 U.S. college graduates what part of college contributed most to a satisfying and well-paying career, the number one response was internships. This, I don't know what I would have thought, but this surprised me, maybe because I didn't have a traditional college experience. I would have said networking if I had to guess.
I mean, honestly, I'm sure for a lot of people that was the way that they found employment. Doing an internship program for a semester was probably the best thing I ever did.
Where did you intern?
I did a program in Philadelphia for a investment analyst firm, and honestly, without that, my career office at my tiny liberal arts college was not helping me at all. So if I didn't have that for my resume, I would have been, screwed in terms of trying to find a job. So I do think that there probably are a lot of colleges out there that could do better in terms of not just teaching you the textbook stuff, but how to get a job. I don't think they do enough of that.
So this comes from an article in the Journal by Greg Ip, How to Spend on Education. The average college degree holder earned 64% more than the average high school graduate in 2018, up from 35% in 1980. But as the college premium has grown, it has also become more variable. Among college graduates in 1979, those at the top earned 4.2 times more than those at the bottom. By 2018, that ratio had grown to 4.8%. And here is the coup de grace, again, to misuse a quote. A Manhattan Institute study found that the lowest paid 25% of college grads now earn less than the highest paid 25% of high school grads.
So those are probably the people that go to college.
Mark Zuckerberg.
Yeah. They chase their dream and they major in the wrong thing, and they didn't realize, this thing I'm majoring in does not pay anything.
Right.
And maybe they take out 6 figures of student loan debt and they're screwed. I can see how that would happen.
So this is a nice segue to the canceling the student loan debt topic that has been floated in the recent weeks as President-elect Biden has won. I saw something last night. I can't remember who posted this, but so they're talking about floating the idea of canceling up to $50,000 worth of student loan debt. Did you know that if that were to happen, this loan forgiveness would be a taxable event, leaving a lot of people no better off than they were having the loan?
Wait, how does that work? I don't understand.
So I'm obviously I'm not an accountant, but I believe that this is a taxable event, meaning you would owe ordinary income on whatever was forgiven.
Oh, really? Okay. I didn't realize that. I don't know. People have really strong opinions on both sides of this. There's the people that say this is crazy, it's crippling our young people. Older generations didn't have to deal with this, and there's other people who say you can't cancel all the debt because I paid mine off, so why should these people? Which I don't know. I paid off my student loan debt. Would I really be angry if someone else got paid off? No.
Well, that's you. That's you. But I understand the argument for why people would be upset. I do. Even though I think it's perhaps a little bit selfish, I understand.
I don't know. But my parents always told me sometimes life isn't fair.
But how about the fact that what is the average student loan debt? It's not. Is it 20 grand, something like that?
It's in the low 20s now. It's been working its way up. So it's the price of a Nissan Sentra or something maybe.
Okay, and then what about the fact also that, and I feel for people with crippling student loan debt burdens, but what about the fact that these people, generally speaking, are earning a lot more money than somebody without a college education?
Yeah, to your point about education. And here's the other one. So Richard Thaler shared this on Twitter this morning. It's the share of student debt owed by each income quintile. And this is as of 2019. And it breaks it out by, the poorest to the richest in fifths. And the top two, so basically the top 40% of income earners hold about half of all student loan debt. And so...
Okay, so you've got doctors and lawyers that are taking these really advanced degrees and earning a lot of money. And listen, it sucks. If you're a doctor and you've got $250,000 worth of student loan debt, I feel for you. That hurts.
I don't know if I really feel for doctors. I don't know. They'll be fine. Doctors will be fine. If you took out $150,000 to go to a nice school and you got an English major or like an art history degree, then yeah, I feel for you. But
here's why people get mad. Because if we're going to cancel student loan debt and we have to somehow pay for it, that's where people get annoyed.
MMT is going to pay for it.
I get that, but I'm saying if the budget office is like, okay, sure, we can do this. How are you going to pay for it?
And the point of all this, though, is that some people could see this as almost like a bailout of wealthy people in a lot of instances, which doesn't seem to be the point of On the other hand, if you had all the student loan debt taken off the hands of young people, my first thought was housing market to the moon.
Well, correct. However, again, if it's a taxable event, not necessarily, because it would probably be a net neutral type thing. But if I could wave a magic wand and have this student loan burden disappear without it causing like a political shitstorm, then I would do it.
Sure. I honestly think you would see a bigger bang for your buck in the economy if we canceled credit card debt as opposed to student loan debt. I'm not saying we should do either, but don't you think that you'd get a bigger bang for your buck? They're actually probably similar sizes, I think.
Well, let's take a look.
U.S. student loan debt is $1.5 trillion, and I have credit card debt at $800 billion.
I have a better idea. Cancel them both.
Yeah, there'd be people really happy about that. But I don't know. Don't you think that, I'm just saying, don't you think people who have credit card debt are probably bigger spenders and they would just immediately spend more money? Like, I'm saying you'd get a bigger boost to the GDP if you did that.
And then what happens if they get more credit card debt? Do you cancel that too?
Oh, no. One-time deal.
One-time deal. Okay.
If this is a magic wand thing, I don't know.
Well, hold on. If we're talking magic wand stuff, people with a lot of credit card debt, I have no evidence for this, but it seems to make sense, are in worse financial shape than people with student loan debt.
Probably. And to my point, all the people that spent money this year from the CARES Act, those are people on the lower end of the income scale, and that's probably people with high credit card debt. But this is never going to happen, right?
I don't know about that.
It's fun to argue about.
I don't know about that.
Happen.
I don't know about that. It might happen. I think there's a non-zero chance.
If we put this in a Nate Silver model, what's your probability of this happening?
8.5.
8.5% that this could happen? Okay, sure.
Here's something that's never going to happen: taxing people to work from home. So
this is the worst take of the pandemic.
So Deutsche Bank had this article, what we must do to rebuild, and it was 83 pages long. There's a lot in here. So before we get to that,
I call it a white paper.
Okay, before we get to that, there were some decent charts in here that I want to talk about. One is showing the satisfaction with democracy by age. And to me, the takeaway is older people are pretty okay with how democracy is going, right? Like they're from ages 60 to 80 and 50 to 70. It's pretty much a flat line.
Don't you think that the more online you are, the less satisfied you are with anything, though?
Oh, for sure.
That's why, like I said, the internet, nothing is properly rated anymore. So if you're younger and you're not as satisfied, there are reasons for that, but also you're just not satisfied with anything, basically.
Do you think, am I reading this chart right? Is this showing that older millennials like you and I, especially you, are really unsatisfied with democracy? And by the way, there's a y-axis thing going on here. It's not quite as stark as it looks, but
from 49% to 44%, yes.
Yeah, I mean, that's a fairly big drop. But is that what this is? Am I reading this right?
Yes. So they're showing that boomers are 50% satisfied, Gen X is 47%, and millennials are 44%. So it's not that big of a difference, even though, yeah, the chart makes it look like there's a huge difference.
This next one is interesting. Millennials and Gen Z and younger cohorts will have nearly as many voters as those in older generations in the G7 by the end of this decade.
Yeah, baby boomers are going to start slowly dying off. And like I said, Gen X is going to pass the baby boomers in terms of numbers by 2030, supposedly. And millennials already have. So the younger generation is coming. And
this next chart ties into the first one. The percentage of U.S. 25 to 34-year-olds living with their parents is 18% almost. And it's been rising since 0304 about. Now, if you're living at home and you're 30-something years old, can you possibly be happy with democracy? You're not necessarily unhappy with democracy. You're not happy with anything, probably.
Right. Yeah. You're just unhappy with everything. That makes sense.
So, all right. So this is how the post starts. For years, we have needed a tax on remote workers. COVID has just made it obvious. Really?
So what do they want to do? They want to do tell me how this tax works.
All right. So they said that work from home went from 5% pre-pandemic to 56% today. And they want to tax people that work from home voluntarily on a daily basis. So good luck enforcing this.
Did a skyscraper write this report? What? This is the dumbest thing I've ever heard.
Is somebody going to time in with the IRS? Hey, I worked from home today. So they're basically saying that 5% of work If you assume an average salary of 55 grand, 5% of work works out to just over $10 per working day, which is roughly the amount an office worker might spend on commuting, lunch, laundry, etc. Nobody wants their taxes raised, especially just because they work remotely.
This is just a bizarre idea. I don't even know where to begin with this one.
And it's going to raise a whopping $48 billion, which is nothing.
Yeah, I don't know. I give them an A for effort, I guess, but I don't see no.
Yeah, this was unanimous. Next.
Yes. I mean, especially let's say you're someone who works from home and you like started your own business and you're already paying for your own healthcare or something. Like,
well, so it would
get out of here.
It would exclude those people. If you are self-employed, it would exclude you.
Okay.
But again, yeah, to that point, like, how is this enforceable? It's nonsense. Dead on arrival, as they say.
Yes. If you think about it, when things got really nasty in March, before the Fed threw their bazooka into the mix here,
I think they shoot a bazooka. You don't throw a bazooka.
I think Powell was like throwing the bazooka like an Incredible Hulk in the Avengers. Basically, treasuries were selling off. Mm-hmm. You remember this? I mean, it's almost hard to go back there because it seems like it was so long ago. But people were selling treasuries in mid-March. They were getting crushed, and people were cash was the only thing people wanted.
That's true.
So I think that there was a safety trade here.
You know
can
what?
see it's slowly starting to come down now.
You're 100% right. How quickly we forget that cash looked very, very attractive in March.
I mean, it seems so easy now to say, oh, you should have bought hand over fist.
Right.
Stocks were down 30%. It was so scary. Even when stocks rebounded a little bit, how many people were calling for a retest of the lows for 2 or 3 months? It was not a foregone conclusion that we'd be at this place.
Credit to Sentiment Trader. Remember, he had some stat that said, like, if this is a dead cat bounce, it will be the only time. I forget what the data point was, but the breadth of the bounce was something that has never happened in a dead cat bounce anyway.
Also, yeah, remember that the stock market bottomed like a 9% up day, and everyone said that stocks do not bottom on those days.
I just wrote a post on this, and I was shocked to learn. So when Rita Wilson and Tom Hanks that night, Rita Wilson, Tom Hanks, and then Rudy Gobert, that was like the holy shit night, right? I think stocks were down 9% the next day. The market bottomed only 7 days later.
That's wild. And
Isn't
that was
that insane? That was the beginning, and the market bottomed in 7 days.
If you think about it, in both instances, both the drop and the comeback, the stock market was ahead of everything in this, right? Because the stock market was falling for weeks before we had the Tom Hanks shit moment, right?
Yeah.
And came back way before too. You talked about it. The vaccine hit at all-time highs, which is just, it's pretty hard to wrap your head around that happened. I was walking by a construction site. This is a couple months ago, and these two young guys looked like they were in their 20s. Doing the siding or whatever on the side of a house. And the one guy goes, so my dad says, stocks are back to all-time highs. Everything's doing fine. And he said, Dad, the stock market does not sign my paycheck.
Wow.
And which was pretty, I wanted to like pat the guy in the back, but he probably would have punched me.
Wasn't last week so much better than the week before?
I don't know. Isn't it always if you're trying to improve yourself, Michael?